Welcome back. You're watching Power Breakfast on cnbc TV 18, the big exclusive interview. Here's more from it. Zee's Punit Goenka speaks to cnbc TV 18's Nisha Poddar. He says they're actively in talks with investors to sell stake in Zee and also discusses the company's strategic stake sale plans, deadlines and more. Here's another excerpt.
It's not just the Zee stake sale which will go towards the entire debt problem. As you know, we had completed the 205 megawatt solar sale with an economic interest of about 1,300 crores, which we are expecting within this quarter. We are in active dialogue for another 480 megawatts of solar that needs to be sold within the next quarter itself.
Right.
We have binding contracts on multiple road assets of the company, which will give us some equity value there as well.
Right.
So between the infra assets and part of the Zee stake sale, we are expecting to solve this entire problem.
All right, so that means you're saying that whatever the transaction is, not more than 10% of Zee Entertainment shares are going to be sold, at least at this point. That's the plan.
Correct, that's the plan.
All right. So that also gets me to another question, that there are two options of raising funds at this point, which is financial investors or strategic investors. Now, Mr. Goenka, in the past, you've had enough interest from the types of Sony Entertainment as well as Comcast-led consortium, but you have shied away from transacting with them and you chose the financial investor route, which also turned out to be piecemeal in nature. Is this transaction now, the second tranche of lender repayment, going to be also part of financial transaction?
So we have been actively in dialogue with financial partners, but of late we have seen some of the strategics also have come back and have spoken to us. The only question that we have posed to them is that we have a 90-day window. And if it's something that they are willing to act within, we are willing to negotiate and discuss with them as well.
All right, but you still have taken 6 months from your mutual fund investors. So if a strategic is really showing interest, you would be able to transact with them in the next 6 months?
Well, at least we need a binding document with them within the next 90 days, without which we will not be able to extend, because I do not want to go to the end of the deadline again just like last time. And we want to close this transaction well between that, before that happens.
In hindsight, do you feel that a more strategic transaction in nature would have done better, because you transacted at 400 rupees per share with your already existing shareholder Invesco Oppenheimer, and then you were expecting that that will become the benchmark price and above that you can transact further.
Correct.
But neither the sentiment around your stock nor the market has been supportive of that. So in hindsight, do you think a strategic would have made more sense, Mr. Goenka?
So in hindsight, we are all wiser, Nisha, but the fact of the matter is that whatever the offers the strategic were making was not even close to the deal that I did with Oppenheimer. So from that perspective, I'm not, I don't regret having not made that decision. Of course, the stock has not held up, as you rightly said, but we've sailed through the roughest of seas, and I'm certain we'll hit the shores very soon.
All right, so that's like the promoter optimism that we always highlight in tough times like these as well. But now, if I were to really look at it, it's likely to be more financial investor in nature, because you want to hold on to 10% stake. You have only 10% stake on offer, and some of the investors may want to probably offload. So do you have also the understanding with your existing shareholders on a strategic sale, if at all that were to happen, so that you still hold 10%?
So there is no written agreement with the shareholders as such with us. I think they have valued our intent and our ability to run this company efficiently, and it's one of the most profitable media company around the world. From that perspective, I think they will back any decision that we make, which they would believe is in the best interest of the business.
All right. If I look at purely the M&A game that happens all across the world, if strategics were interested in your company, the way the stock price is right now, are you also at risk of a hostile takeover, you think?
It's unlikely that a hostile takeover would happen, because keep in mind that my largest shareholders have been backing me even till now. Therefore, going out there and trying to acquire this shareholding from the lenders would still require them to at least have us running the business, without which I'm pretty sure that the DNA of this company cannot be understood by most people.
All right, so you're sounding pretty confident of that, and you also gave me a breakup of your infrastructure asset sale. So if we can delve deeper into that, and 10% stake sale in Zee Entertainment and the rest of the funds to be raised from your other asset sale.
Correct.
That's the mix that you're looking at?
That's it.
At the moment. Is Dish TV really figuring in this plan at the moment?
No, not at the moment, but we are working on Dish TV as well, but nothing that is concrete that I can share with you.
How much could be really recovered from infra asset sale at this point, you think?
So let me once again clarify, Nisha, that the 7,000 crore number that you talked about is correct. But as I said earlier, if I am able to repay VTB a certain part of their debt, they will restructure this loan even beyond the 1 year and under which it will mature.
Right.
So it's not 7,000 that we need to solve for immediately.
Right. So
Welcome back. You're still watching Power Breakfast on CNBC TV 18. Now, the Reserve Bank cut repo rate for the 5th consecutive time this year, reducing it by 25 basis points to a 9-year low of 5.15%. They also maintain their accommodative stance. Ekta is now here to tell us what all of the brokerages are making of the Reserve Bank's action. Hi, Ekta. Good morning.
Hi, morning. Well, I'll start with Morgan Stanley, which has said that, the dovish tone has kept room open for easing. They expect one more cut by the MPC, likely in the December policy. For JP Morgan, they said that they expect another 25 basis cut in December as growth remains weak. And in fact, the September PMI reveals that growth slowdown may not have bottomed out. Deutsche Bank's view is that the cut in the repo rate by 25 basis points was again in line with their expectations. They expect a further 40 basis points cut in this cycle. Currently, they forecast another 25 basis points in December, followed by 15 basis points in April policy. Kotak has said that the MPC's focus remains on reviving growth. They're revising down their GDP forecast, in fact, warranted for a deeper rate cut. They believe the MPC will cut repo rates by another 50 basis points through the course of FY20. Nomura says that they believe that the easing cycle has ended despite the commentary from the RBI. And Goldman Sachs has also said that they've reduced the policy rate as expected by 25 basis points. They expect the probability to deliver a final 25 basis points to cut the repo to 4.9% by the month of December.
Ekta, thanks a lot for that. We'll definitely watch out for how this story pans out going ahead, how much of room there is for the RBI to go ahead and cut more rates. But since we have Ekta with us, let's also discuss some pharmaceutical news. US FDA has issued a warning letter to Glenmark's Baddi plant. Ekta, give us the details.
Well, yes, definitely very disappointing news which has come in for Glenmark Mangalam. Their Baddi facility has received a warning letter by the US FDA. Now, remember that the Baddi plant was inspected by the US FDA in April of 2019. At that point in time, they had received a couple of observations which eventually turned into an official action indicated status by the US FDA, which increases the probability of a warning letter in August. Now, the Baddi plant is around 7% of their total sales, approximately contributes around $30 million. So it doesn't contribute that much financially. They've said that there are no important filings in the next 12 months also from the plant. But the fact that they've received a warning letter, and that's been the sort of trend that we've seen for many Indian companies this year, that's definitely going to weigh on sentiment for Glenmark. And the repercussion is always that the US FDA takes a sterner look on all of the other plants and inspections when there is a particular company which has received a warning letter.
Ekta, thanks a lot for that. It'll be interesting to see how the Glenmark stock fares today. Some negative news coming in there, like Ekta just pointed out. We have to slip into a short break now, but up next, we'll tell you how the markets have performed ever since the cabinet announced the corporate tax cut. Stay tuned.